we have everything focused on the long term, but it takes short terms to make up a long term. So by 2030, we are in print for our base case as saying that we believe Bitcoin, which is now closing in on 40,000, will be at 640,000 by 2030. That's our base case. The Bitcoin ETFs have increased the probability of our bull case, which is $1.5 million.
Cathie Wood is the founder, CIO, and CEO of ARK Invest, an asset management firm that manages several actively managed exchange-traded funds based on disruptive innovations. Cathie has been an active participant in the crypto and digital assets space since her firm purchased $100,000 worth of Bitcoin at $250 per coin in 2014. Most recently, the firm's spot Bitcoin ETF collaboration with 21 shares got the SEC's green light and is now one of the 11 Bitcoin ETFs open to investors. As a result of her team's extensive research on Bitcoin, blockchain, and other disruptive innovation platforms, Cathie is predicting a massive explosion in Bitcoin's price in the long term. According to the ARK Invest CEO, Bitcoin could be trading as high as $1.5 million per coin by 2030, a 3,650% price explosion from current prices. This is Cathie's bull case for Bitcoin, and although she has had this prediction for a while now, she believes the approval of spot Bitcoin ETFs has increased the probability of the bull case. In addition to Bitcoin, Cathie is also bullish on other cryptocurrencies like Ethereum and the overall blockchain industry. During a recent interview with Thinking Crypto, Cathie predicts that spot Ethereum ETFs will be the next big thing for the space. She notes that the SEC had no choice but to approve spot Bitcoin ETFs because of the grayscale case. Cathie believes a similar scenario will play out with the Ethereum spot ETFs. During the interview, Cathie also talks about Congress and impending crypto regulations, as well as the impact of Bitcoin ETFs on crypto adoption. We will now bring you clips from the interview. But before we do, please take a little time to like this video, subscribe to the channel, and don't forget to drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
I think one of the reasons for the regional bank crisis was the Fed raising rates at a faster rate than it ever has, up 24-fold in 17 months. Never seen anything close to that. Chairman Volcker increased interest rates twofold, not 24-fold.
Right.
So that was part of the regional bank crisis. And notice Bitcoin went up during that. So, and it is true, it probably was anticipating the financing program that the Fed put in place, which was a bit of a jog toward easing, and then it went back, a reverse course.
Mm-hmm.
So we think that the Fed is going to cut rates. Now, there are a lot of confusing economic data. We hear something from companies and something very different from the government in terms of economic activity. They're not matching up. They're not matching up at all. And so I find that very interesting. I think the Fed is going to figure out that there is much more stress in the system, that the regional bank crisis was the first sign of it, and we'll get other reminders, and that they will move into a rate cutting. Now, what we really think is going to happen is it's going to be less about real economic indicators. It's going to be about price deflation. We think, and Walmart has said, we're going to have to cut prices. That's deflation. That's not disinflation even, it's deflation. And I believe the Fed is going to be shocked at broad-based price deflation this year, and that will be, they're using now inflation as their primary gauge. They're not as focused on real economic activity because inflation has come down even without a recession. I think we've been in a rolling recession, but nonetheless. So inflation is the primary variable they're watching. We think there's going to be deflation, so they'll get 2% all right, and it'll keep falling. So they'll lower interest rates. That will be very good for risk assets, and Bitcoin among them. It was interesting. I think it was in late in the fourth quarter, early earlier in January, Bitcoin led the market, and so began to. And so we're watching Bitcoin now, and of course we're having a sell on the news moment after the 11 Bitcoin ETFs are approved, and I don't know how far that's going to go. This is high frequency trading. It's people getting in just for that short boost and now getting out. But institutions and these retail platforms are going to start moving in, and then we'll see the scarcity values. After this election, I don't think Chairman Gensler will remain at the SEC, whoever is elected. I think he has aspirations for some kind of political appointment, so he may go for that reason if Joe Biden is reelected, or he will go altogether if a Republican is nominated. So, the SEC could drag its feet, but I think the court cases have spoken pretty loudly. We have the Coinbase hearings. We'll get lots of information about what is not a security during that trial. So I do think that raises the odds of an Ethereum spot approval. The Gensler could be in the way, but we do think it will be approved.
Meanwhile, the SEC's case against Coinbase is in full swing. Last year, the Securities and Exchange Commission charged Coinbase with helping to trade unlisted securities. The SEC alleges that Coinbase operates as a broker, an exchange, and a clearing agency for unregistered securities, including Solana, Cardano, Matic, Filecoin, Sand, AXS, Flow, Dash, and others. However, the Coinbase defense has argued that these assets are not securities but commodities, just like Bitcoin and Ethereum, which seem to have earned SEC's approval. During the court proceedings on Wednesday, Coinbase lawyer William Savitt argued that crypto is more like collectibles than securities because investors don't have actual stakes in a company. It's the difference between buying Beanie Babies Incorporated and buying Beanie Babies, Savitt argued. The outcome of this case will be an important event for the cryptocurrency industry, and according to Bloomberg analysts, the odds are overwhelmingly in Coinbase's favor. During the proceedings, New York District Judge Catherine Polk-Failla pointed out that the SEC's definition of what constitutes securities was too broad. In a social media post, Bloomberg senior litigation analyst Elliot Stein noted that the judge's questions showed that the SEC might have already lost the case. The post reads, "The judge wanted a limiting principle to the SEC's definition of investment contract that wouldn't encompass collectibles. We view the one offered by Coinbase as more compelling, requiring investment in a business versus just an ecosystem, along with an enforceable obligation. Our thesis: Coinbase is 70% likely to beat the SEC, if not outright on this motion, then later. Even if the case survives, it likely reaches the Supreme Court, which we think will narrow Howie." In her interview, Cathie talks about the importance of the Coinbase case, crypto regulation, and the impact of Bitcoin ETFs on crypto adoption. Here are more clips.
I think that Coinbase is going to do us a great service through the court system, and the court system is going to do us a great system. You know, if you look back in history, we have had an experience like this before. It was when derivatives were launched, and the SEC and the CFTC were vying for power over regulatory power over derivatives. It went all the way to the Supreme Court, which this probably will. And that forced legislation so that both the SEC and the CFTC have a role in derivatives oversight. But those roles are clearly delineated and they don't cross over. I think the same thing's going to happen here. This could be an election year issue. And I think that's one reason we are seeing so many congressmen getting so well educated on what this is. I mean, I heard Congressman French Hill a couple of weeks ago, and I said, "Wow, he's come up the learning curve so quickly and knows so much. This is fantastic." Knowledge and education. Knowledge is power. Education, obviously, is the route to knowledge. So I think, yes, I think the odds I don't know how high they are, but in the next 2 years, I think the odds of legislation are very high. I don't know how the election year complicates it. I do know that there are voters out there who are one-issue voters, and they are crypto voters. And I know that Washington is hearing that loudly and clearly. I think when people put something in their portfolio, they're apt to watch it a little more closely and maybe seek out a little bit more education, even if their advisors have put them in. And certainly the advisors have to educate themselves. So I think once more and more people educate themselves and understand what this is, it's a technology, yes, and it's a monetary system, then I think they're going to understand why it's taking off in emerging markets and why everyone should have a little bit of an insurance policy called Bitcoin. And last year, the regional bank crisis was a great case in point. I think many people were shocked as regional banks, the KRE, the regional bank index, was imploding. Bitcoin took off. It went up 40 to 50%. And it was the first time that traditional investors, many more, took note. Wait a minute, why did it do that? This is supposed to be a risk-on asset. It's supposed to be very volatile and highly correlated with risky assets. What just happened? And what they learned there was that, hey, it's a risk-off asset too. Why? Because there's no counterparty risk like there is in our banking system. You're not going to be held hostage like you were in 08, 09, wondering if your bank was going to survive or you'd get any more than 250,000, the guarantee, the FDIC guarantee out of your bank. So this doesn't happen with Bitcoin. Education. Wow. How many risk-off and risk-on assets are there? So I think the more people come in, the more they'll be comparing and contrasting what this is to what we have in the traditional financial world. And guess what? This is better. This is better. And it is why emerging markets talk about needing an insurance policy in hyperinflating economies. It's an insurance policy against counterparty risk, inflation, and deflation.
Meanwhile, Paul Gruwath, Chief Legal Officer at Coinbase, says the exchange is prepared to follow this through and ensure that the cryptocurrency industry is not a victim of further political gimmicks. In a recent thread of X, Gruwath noted that the SEC's allegations against Coinbase are false, as the exchange does not offer securities. Here are his posts. Today, we made arguments in our motion to bounce the SEC's suit against Coinbase. After hours and hours, this much remains clear. The SEC continues to claim broad authority over all investments while offering no limiting principle to its definition of investment contracts. The SEC cannot unilaterally expand and redefine its own regulatory ambit. This should be left up to Congress and the ongoing legislative discussions about regulatory frameworks that are currently taking place. Coinbase does not offer securities. We are confident in our legal arguments and look forward to a decision that will bring much-needed clarity to the industry. Which do you think has the upper hand here? Coinbase or the SEC? Please drop your replies as well as your comments on Cathie Wood's interview in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.